Hello everyone. This is the pre-market report video for today, 10th July 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday was yet another day where Nifty reached an all-time high value, and for the first time Nifty closed above 24,400. I read this on Rochester.com. Apparently in the last 26 trading sessions, Nifty reached the all-time high value 15 times, whereas Sensex reached it 14 times. If we see it like that, those were really crazy and it appears super positive, doesn't it? But I want to highlight one thing. Let's consider June 7th, since that's the day Nifty reclaimed the election results day losses. So from June 7th to yesterday, even though Nifty reached multiple all-time high values on multiple days, cumulatively it increased only 4.91%. See, 4.9% is nothing, it's like crawling, but at the same time, this is unlike previous times where 3% Nifty increase would be followed by a 2% decrease. That's normal. This 4.9% increase occurred without any meaningful consolidation. Honestly, in the last 2 years of my pre-market report, I haven't seen this kind of rally, slow but steady. Even yesterday, it increased 112 points, but that 112 point increase was just 0.46%. So 100 points up and 100 points down in the 24,000 index range, I wouldn't consider that as a sharp movement. Still, somehow Nifty is managing every day this new height. Regarding the sectors, IT, energy and oil and gas closed very mild negative. Other than that, all other major sectors closed positive. About FMCG and pharma, we already discussed in detail in the last pre-market report. Then auto sector was the major positive contributor, as some local media in Uttar Pradesh reported that UP government is going to waive all registration fees for hybrid cars. This in turn made Maruti Suzuki stock price to increase by more than 6.5%. Thus, it was the top Nifty positive contributor. Finally, the overall market slightly improved. The number of stocks that closed positive yesterday increased from around 43% on Monday to 50%, whereas the number of stocks that decreased dropped from 54% to 48%. Roughly, it's not massive, but a small number of stocks more closed positive than declined. Institution wise, for the fifth day in a row, FIs were net buyers, but only for 314 crore rupees. DIs also net bought shares for nearly 1420 crore rupees. I saw this interesting number on the NDTV Profit website. If we take the total open interest of all future and option contracts, yesterday the FII's long short ratio was 1.35, which means FIIs are holding 35% more stocks, hoping the market will go up further. On Monday, this value was 1.46. From 1.46, FI's long short ratio it dropped to 1.35 yesterday, clearly indicating that they are less positive than on Monday. Still, 35% on one side is a significant number. Regarding this ratio, from today onwards, I will start to follow this regularly. So, those were the quick takeaway from Indian market. Now, coming to US market. As we all expected, the Fed chairman did testify in front of the Senate. Here, I would like to highlight some points. One, he flagged the risk of keeping the interest rate high for too long. To simply put, what he meant was, if we keep the interest rate high for too long, it will start to hurt the US economy. This is huge positive since he is directly signaling a rate cut. Other than that, he said all the regular stuff like he believes the economy is slowing as expected, inflation is controlled, and he needs more data to boost his interest rate cut confidence, all the same old stuff. Because of his testimony, the CME FedWatch tool increased the probability of an interest rate cut in September to above 72% from 59% a week ago. All these made the US market to hit the fresh all-time high values. However, at the close, it ended flat. Dow Jones was down by 0.13%, S&P 500 increased by 0.07%, and Nasdaq increased by 0.15%. In the case of US VIX, it increased by 1% and moved around 12.5. About oil, it's the same as Friday and Monday. It hasn't changed much. At the time of this video, Brent crude trading near 85 US dollars per barrel and WTI crude is at 81.5 US dollars per barrel. Regarding Indian ADR, in line with the Indian market, only ICICI Bank closed positive. About the reason, there is no concrete reason I could find, but still, I'm guessing it may be because of ICICI Prudential Life Insurance positivity, which we already discussed in the last video. Regarding Indian ADR, ADR. In line with the Indian market, only ICICI Bank closed positive. About the reason, there is no concrete reason I could find, but still, I'm guessing it may be because of ICICI Prudential Life Insurance positivity, which we already discussed in the last video. Other than that, all other three ADRs closed at least 1% negative, whereas in the Indian market, it was just neutral to negative. So despite the increase in the interest rate cut probability, IT stock areas showed a fresh negative bias. I think it may be because of Thursday's upcoming TCS results. So today in the Indian spot market, IT stocks will be on focus. About GIFT Nifty, at 3 a.m. Indian Standard Time, it closed at 24,450. This is roughly indicating 50 to 70 points gap down opening. As a summary, global momentum is good, but GIFT Nifty and the IT areas indicating a gap down opening. Let's see. Then as per stock open interest, Bata India, RBL Bank, GMR Infra, SBI Card, Shriram Finance and Atul Auto got an increase in open interest along with a negative close indicating the short build-up. On the other hand, IEX, Crompton, ITC, Deepak Nitrite, Laurus Lab and Exide Industries got an increase in open interest with a positive price close indicating the long build-up. Regarding the things to look out, before the market opening, lot of Chinese data like their consumer inflation and wholesale inflation are due. Then there is nothing that I'm aware of during our market time. In the aftermarket hours, Fed chairman is going to testify again to Congress. Then crude oil inventories and US government's 10-year note auction are the important things we need to keep an eye out today. Coming to technical, Nifty opened 30 points gap up and touched a new all-time high of 24,444 and closed around 24,430. Thus on the daily chart, Nifty formed a bullish candlestick pattern after a doji pattern in the previous session, which shows the increase of positive bias. In addition, RSI and MACD momentum indicators maintained a positive trend. Hence, given the strong momentum, Nifty is likely to climb above 24,500 in the coming sessions, followed by the resistance 24,600, which is the 161.82% Fibonacci retracement level of the previous fall and also the daily upper Bollinger Band, while the immediate key support placed at 24,300. In case of Bank Nifty, it opened 40 points gap down and traded in a 300 points range to finally close at around 52,570. Thus on the daily chart, Bank Nifty formed a bullish candlestick pattern and continued to take support at the 10-day exponential moving average 52,441 on a closing basis. But still the index consolidation was stuck in a range between 52,700 to 52,100. A decisive break on either side will lead to trending moves. However, a break above 52,700 will open up further upside towards 53,000, and if Bank Nifty fails to hold the support of 52,100 to 52,000, it can decline further towards 51,700 to 51,500 mark. Regarding the weekly options data, the maximum call option open interest was at 25,000 strike, followed by 24,500 and 24,400, with maximum new call option writing at 24,400 strike and then 24,700 and 24,600. Whereas on the put side, the maximum open interest was at 24,000 strike, followed by 24,300 and 24,200, with maximum new put option writing at 24,400 strike and then 24,300 and 24,150. Thus from the options data, 25,000 is expected to be the resistance for Nifty with support at 24,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.